Hello, I'm Benoit, Principal at CB Capital. Our investment philosophy is based on 6 main principles. Number 1, a long-term focus. While over the short term, markets can be volatile and unpredictable, and short-term trading and market timing just doesn't work. Over the long term, market returns closely track the growth of company earnings over time, which have averaged about 8% a year since 1960. Getting invested and staying invested is the best way to capture the long-term market returns. It is often said that time in the market matters much more than timing the market, and I couldn't agree more. Number 2, asset allocation versus security selection. Asset allocation is the percent of a portfolio dedicated to different asset classes, such as stocks, bonds, or cash, whereas security selection are the individual stocks or bonds that are purchased. What's interesting is over 90% of a portfolio's long-term return is attributable to the asset allocation decision versus the security selection decision. So the percent in stocks versus bonds is much more important than the specific stocks or bonds that are selected. So we spend our time getting the asset allocation right. Indexing versus stock picking. The success of indexing over active management has been well documented over the last 20 years. In fact, over 75% of equity mutual fund managers underperform their benchmarks in any given year. And those who do outperform overwhelmingly go on to underperform in subsequent years. We utilize index securities to capture equity exposure in our client portfolios. This avoids the underperformance, tax impact, and high fees of active management. Number 4, diversification. Diversification is owning asset classes that behave differently in the same market environment. For example, stocks might outperform in a growing economy, whereas bonds will do better in a recession. And commodities such as gold will do well in a high inflationary environment. So, proper diversification allows a portfolio to perform well in all market environments. Number 5, tax efficiency. We achieve tax efficiency through several techniques, such as tax loss harvesting, rebalancing techniques, asset location, and utilizing securities that are more tax efficient than others. And number 6, minimizing investment fees. We understand that over time, seemingly small fees can add up. So where appropriate, we utilize securities and security types that carry lower fees. If you have any questions, please contact us, and thank you for watching.